Good morning, everyone. My name is Fisokuhle Mbuto, and today I'll be taking you through some of the highlights from our Mr. Price Group company update report. This is specifically related to the FY26 results. So on the summary side of things, Mr. Price has a strong core business and the performance can be seen as quite well. Our recommendation is based on a few things. Number one is Mr. Price is positioned to benefit from any positive change in consumer affordability over the medium term and also over the long term through easing of inflation and central bank pivots to rate cuts. Then we've also got an expectation of long-term growth and market share protection, and that's going to be driven by two things. Number one, organic growth, right? Mr. Price has had a history of being able to spin off some of their businesses like Mr. Price Kids and Mr. Price Cellular into well-performing standalone businesses of themselves. And then number two, the performance is also going to be coming from the already acquired businesses, so the likes of your Studio 88, your Power Fashions, and then into the future NKD as well. This is still going to be supported by relatively low levels of debt compared to peers, because like I said, Mr. Price has added about 7 billion rand in debt into their balance sheet, but when you look at it on a relative basis when compared to other peers, those debt levels are still relatively low. Now this supports the fundamentals of Mr. Price in their ability to execute and keep their balance sheet healthy, and also when we're looking at what the plan is for this debt, actually brings up to our next point in the expansion into NKD. They are planning to use the cash generative ability of the business to try and manage some of that cost of debt, particularly in Europe. But we're going to be starting to see the full benefit of that management of that cost by FY26, and this has been specifically highlighted in the FY26 results. The other important thing for Mr. Price at this stage is that it has been hammered quite aggressively from a multiples perspective. It's trading at very low levels from a PE perspective. Now, Mr. Price has demonstrated relatively strong business fundamentals. This is something that we've touched on. And when we combine that with the low valuations that we've just spoken of and a relatively low value proposition during consumer affordability concerns, you can start to see that this places the business itself as favorable when compared to peers, because it starts becoming one of the preferred retailers by consumers from a value for money perspective. We have an intrinsic value of about 228 Rand per share with an upside of 32% and a buyer recommendation